All right, it is now 9:34, so we're going to get started with our Zoom meeting today. What we're going to end up doing today is we're going to talk predominantly about some of the crop insurance changes in the new Farm Bill plus the SCO product, and then we're going to end up looking at at some of the questions that we've ended up getting over the last few days here. We did end up having our one of our deadlines changed for the yield update and base acreage reallocation. So again, just to give people an idea of where we're at in terms of deadlines, they modified the landowner's decision to update their payment yields and reallocate their bases. It was February 27th. It is now March 31st. So it gives you an extra 30 days to get into that FSA office and look at doing your yield updates and potentially reallocating your bases. Now, the one that I would strongly recommend everybody to do, if you have not done so already, is to update those payment yields, because again, you're picking between the higher of two numbers for each crop and each FSA farm. So there is really no downside on making that decision. As we move through March, we're also going to have the crop insurance sales closing date. That also applies to the supplemental coverage option, which we're going to talk a little bit about today. So you want to make sure that between now and March 15th, you get in with your crop insurance provider to discuss the options that are available for crop insurance for the 2015 planting year, and see if potentially the supplemental coverage option, the new crop insurance program, is correct for you. The commodity program decision remains a March 31st deadline. So again, if you're going in to update those payment yields or reallocate those base acres, it probably would be beneficial, and I know your FSA offices would greatly appreciate it if you ended up signing up for those PLC or ARC programs by that or with that appointment as well, because it would save them a little bit of time. These offices are going to be extremely busy between now and March 31st, so we want to make sure that you're giving people a lot of time in order to process the amount of paperwork that is required for each of these program elections and the decisions leading up to it. Last reminder is, again, even though our commodity program selection is in place for the life of the Farm Bill, we still do have an annual sign-up required. So we do want to make sure that we are signing up on an annual basis to ensure that if any payments are triggered, that we are going to end up getting those payments. The one thing that I do want to end up just quickly talking about is we did have a couple of questions this past week on if you can't get a unanimous choice, if you have diverging opinions on whether you should reallocate base or retain your base acres, what ends up happening. So if you have multiple owners of the same FSA farm number, and one wants to retain base acres and the other one wants to reallocate base acres, the default is to retain base acres. So if you have a dissenting opinion, it'll default to retaining those base acres. Similarly, with your program election, if you end up having dissenting opinions on choosing between Arc County, for example, and PLC, what will end up happening is you'll get defaulted into PLC. Now, there's a little bit further penalty on the commodity program side, where you will actually forego any payments in 2000 for the 2014 crop year if you do get defaulted. So again, that's another one where you want to make sure that you're making that decision. Moving along, what we're going to end up moving away from today is we're going to move away from those commodity programs. So we're not going to talk about ARC or PLC. We're going to move into the risk management agencies portion of the Farm Bill. So we're going to talk a little bit of some of the changes to traditional crop insurance, and then we're also going to talk a little bit about the new supplemental coverage option, or SCO. And then next week we're going to talk about the stacks program and generic base acres, kind of a cotton focus next week. But today we're going to talk about crop insurance and the supplemental coverage option. Now, one thing that I always want to point out is when you're looking at the base reallocation decision, the yield update, and your commodity program selection, you're doing that at FSA. These programs are free to participate in, but again, once you make your commodity program decision, you're in it for 5 years of the life of the Farm Bill. When we're talking crop insurance, these products involve a premium cost share, and they can be made on an annual basis. So you can end up choosing to participate on an annual basis in the crop insurance programs. And again, you're purchasing your traditional crop insurance as well as the 2 new products from your crop insurance agent. So again, you're going to want to end up getting with your crop insurance agent between now and March 15th. So the first one I want to quickly talk about is conservation compliance. This is something that's under the 2014 Farm Bill, and essentially, in order for producers to continue to get their crop insurance premium subsidy, they are now tied to conservation compliance for wetland conservation and highly erodible land. So you must have on file an AD 1026 by June 1st, 2015 at FSA. Most producers, or many producers, are already going to have one on file, but you do want to double check and make sure that it's available, because, or it's on file with FSA, because you don't want to end up being in non-compliance. The violations, if you're in violation, it applies to all the farms that you have, and you will no longer get that premium subsidy for your crop insurance. And what this brings it to is to also want to know what's going on if you have different farms that are farming with business partners or across multiple legal entities, because you want to be careful. If one of your business associates is in non-compliance, it can affect you on that joint piece of property or that joint business. So you do want to end up making sure that you're paying attention to what's going on the conservation compliance side of things. You want to double check and make sure that you have this form on file with FSA. The next one, and this is one that again you're going to want to talk to your crop insurance agent. They did put in a APH yield exclusion, and basically what the yield exclusion does is it allows farmers to exclude years in exceptionally bad years, such as a year when a natural disaster or extreme weather occurs, from their production history when calculating yields used to establish their crop insurance coverage. So essentially it's going to allow you to end up establishing a higher yield or revenue when you end up purchasing your crop insurance product. The consideration is if your county yield is at least 50% below average of the previous 10 consecutive years. This is available for 2015. We have the eligible crops, so for corn, soybeans, and cotton, as well as grain sorghum here in Tennessee, are going to be of particular interest to many of you. So you want to talk to your crop insurance agent and make that decision. It's available for CAT and additional coverage levels. So if you're interested, if your county is eligible for this APH yield exclusion, if we look at corn for 2015, if you look in Tennessee, the blue counties are counties where there's 1 year that is eligible for a yield exclusion. The green counties are 2 to 4 years. So again, if you're in the middle portion of the state, southern middle portion of the state, there can be multiple years potentially that you could end up excluding your yield. And then up in the very northeast corner, we have even more years that could potentially be excluded. So again, this is for corn. If we move our focus to soybeans, again, there's several counties where you can end up excluding 2 to 4 years, and a few that end up allowing a 1 year exclusion. So again, we want to take advantage of this opportunity by talking to our crop insurance agents and making sure that we are updating or excluding these yields so that we can get a bit of a higher yield or revenue guarantee. If you look at cotton, again, a lot fewer counties, but if you were in the southern portion of the state, there are some years that we can end up excluding cotton yields. So again, I just want to remind people of where our subsidies are. If you end up looking at your CAT coverage plus a buy up to 85%, based on what your unit structure is, you can see the different premium subsidies. For the new crop insurance product, SCO, it's a straight 65%, and it actually goes beyond this 85% coverage level. It covers up to 86%. Now with that SCO option, what it does is it'll cover from where your underlying policy ends up to a maximum of 86%. So again, if you are purchasing 60% conventional crop insurance, SCO will end up covering up to a maximum of 86% or a 26% coverage level. If you're purchasing 75% for crop insurance, it'll only cover from 75 to 86% or an 11% coverage level. So again, just to review what the supplemental coverage option is, I do want to make the distinction because I've had several producers ask me questions when we've done meetings about the eligibility of crop insurance if you're in Arc County. And I want to be very clear that your traditional crop insurance, so your revenue protection, your yield protection, or your revenue protection with harvest price exclusion, is you can purchase those products regardless of what your commodity program choice is. The product you cannot purchase if you enroll a farm in ARC is the supplemental coverage option. The underlying crop insurance policy, or what I would refer to as your conventional crop insurance policy, remains in effect or is still available for purchase regardless of what your commodity program choice is. Now, if you're looking at this supplemental coverage option, then again, if you are in ARC, you can't end up purchasing this for that farm. This is, again, an annual decision. The SCO coverage option has to be purchased by the sales closing date, so March 15th in Tennessee. There is the premium cost share where the government will pay 65% of that premium. You must have that underlying crop insurance policy because SCO will follow the coverage of the underlying policy. So if you are purchasing a yield policy, then SCO will only cover yield. If you're purchasing a revenue policy, then it'll cover revenue. And it'll cover up to a maximum of 86% as mentioned. So again, wherever your buy-up ends on your crop insurance, SCO will cover from where that buy-up ends up to a maximum of 86%. Now, as far as the effectiveness of the SCO product, it is triggered on a county level loss. So if your farm does not traditionally follow what's going on in your county, this might not be a good risk management tool that's available to you. Just for the plain and simple fact that if you have a set of circumstances where your farm experiences a dramatic loss and your county does not, you would not end up getting payments under the SCO product. Now, on the flip side of that, if you had a really good year and your county did experience a loss, you could end up potentially getting a payment under SCO. So again, how your individual farm circumstances correlate with what's going on in your county is really going to determine the effectiveness of this product from a risk management standpoint. So you're going to want to compare where your farm is versus what's going on in your county. Now the other one, since we do have a whole bunch of deadlines that are kind of very sequential, we did have the yield update and base acre reallocation deadline extended. So our first deadline is now actually going to be the crop insurance deadline, which you're going to have to end up having completed by March 15th. But you do want to be very cognizant not to end up getting SCO coverage on the same farm that's enrolled in ARC or same acres that are covered by ARC. Because what will end up happening is you will lose the SCO coverage for that farm serial number. You'll forfeit 20% of the SCO producer premium, and you won't be able to purchase SCO for the next crop year. Your underlying crop insurance policy will remain in effect, so you do want to end up making sure that you avoid that. You must indicate acreage covered by ARC or stacks on multi-peril crop insurance acreage report. Again, I haven't talked about stacks, but stacks is the upland cotton insurance product. You can't end up purchasing SCO on the same acreage that's covered as stacks. So again, you want to make sure that when you're looking at purchasing your crop insurance and potentially this SCO product, that you want to communicate to your crop insurance agent that you are considering a specific commodity program for an individual farm, and make sure that you're not having ARC and SCO overlap. Otherwise, you'll get into some issues as far as forfeiting a percentage of your premium and getting not the coverage that you were looking for. If you look at eligibility, we have very good eligibility for corn, so it is available in all counties except for the ones at the bottom here. So you can't purchase it in Anderson, Campbell, Hancock, Moore, Roan, Unicoi, and Union. Other than that, it is available for purchase for the 2015 crop year for corn. If you look at soybeans, again, we have very good coverage in West Tennessee and Middle Tennessee. If we're looking into the eastern portion of the state, you'll want to check and see if you are in one of the counties listed at the bottom where it won't be eligible. My understanding is that they are looking at ways to end up making it eligible across all of these counties, but for 2015, unfortunately, it's not going to be eligible for purchase for soybeans in some of these eastern Tennessee counties. If you look at cotton, again, we're going to get really good coverage for SCO and stacks in West Tennessee, and then also in Middle Tennessee. So you can see the counties where we have these products available for purchase. Wheat, again, this is for 2015, so we're long past the deadline for wheat. However, I do want to point out, if you look at the state of Tennessee, we do not have very good coverage. In fact, in 2015, we only had 8 counties that were eligible to purchase this SCO coverage. And again, they're going to be looking at adding more counties to hopefully end up increasing that coverage level. But at this time, we are not sure exactly which counties are potentially going to get covered in future years and how they will end up adding them. So again, you might want to factor that in if you are thinking about the benefit of SCO as it relates with your commodity program decision. If we don't know there's going to be coverage, you don't want to maybe put as strong an emphasis on this as would be if it was available in your county. Again, we have some different tools that are available. The one that I will mention on the crop insurance side of things, if you are interested, we want to end up we want to end up taking a look at what we're doing for crop insurance decisions. So if we want to end up looking at the tools that are available on the RMA webpage, we can end up taking a look at this this tool that is available from Risk Management Agency. What it essentially allows you to end up doing is to end up having your APH, what your projected price is, what your expected county yield is, and then also have your insurance choices for either SCO, and you can select from either yield, revenue, or revenue protection with the harvest price exclusion, and then also your percentage coverage. So we do end up having this information available on the web page. So you want to end up taking a look at that if you're looking at some potential scenarios as far as when payments would end up occurring, or you can go in and talk to your crop insurance agent, as they'll be able to pull this information for you. The last thing that I'm going to quickly show is that there's a spreadsheet that's out there, and this is available at Mississippi State to download. And essentially what it'll end up doing is you can end up putting in some numbers as far as what your projected price is. I put in the 415 from the price determination period for corn. You can make some assumptions about your APH yield plus your crop insurance. So if you want to end up taking a look at this spreadsheet, what it essentially allows you to end up doing is putting in a bunch of different assumptions and end up looking at when some of these will potentially end up triggering and under what circumstances. So I encourage people to end up taking a look at that and seeing if that's a product that they might be interested in. And again, if you want to end up talking to your crop insurance provider in order to get some estimates as far as what your premiums are potentially going to be for your specific circumstances, and evaluate whether it might make more sense potentially to buy up some additional coverage on your traditional crop insurance rather than look at a group product. So again, it's something where you want to end up getting with your crop insurance agent and making sure that you are first in compliance and have the appropriate forms on file. Make sure that again, if you can take advantage of those yield exclusions, and then look at your conventional crop insurance, whether you need to buy up some more coverage, and then lastly look at some of the options that are available with these new crop insurance products for SCO and stacks. With that, if there's any questions, we can take them now. If not, we will be talking about stacks and generic base next week, and we will go from there. Thank you for attending, and if you have any questions, please do not hesitate to email us or contact us from the web page.